The majority of investors thought that we were crazy, particularly the Japanese investors. They saw three guys, one is a woman. I'm smiling now, but it was 99% no, you're crazy. Had this piece of legislation not being in place, we probably would not have attempted at all to enter Japan because the complexity of breaking through the banking, securities, and insurance regulator is always very hard, but in Japan it's hardest. We applied, and then it's only halfway through the first application that we said, yeah, but by the way, we're a FEM company, so we're doing this digitally. And they were like, what do you mean? The level of financial anxiety that exists here is unprecedented, partly because people live a long life, etc., but partly because they have nothing, build a future and make sure that they've got a decent financial wellness to take them through 100 years.
You have just heard from Samantha Ghiotti, co-founder and CEO at Habitto, helping young Japanese to build a better financial future by providing an intuitive and transparent way of making the best of their money. So let us dive right in.
Hi everybody, I'm Sam. I'm the co-founder and chief executive of Habitto. Habitto is Japan's first connected financial experience. Basically, we're helping people save, invest, and grow their money. And we do on a single platform that operates as a front-end distribution layer for individuals. We're a direct-to-consumer brand. Notwithstanding the fact that we are incorporated in Singapore, that's where the holding company is. Habitto is actually a KTA, and our business is natively Japanese. And I think that's a little unique. Typically, what we've seen is some of the big global brands that have come and gone. We're also seeing international spin-offs of some of the large global FinTechs from Coinbase, Kraken, Revolut, Wise. Some have come and gone. And so we decided to enter Japan with a different stance, which is to build a natively business that is Japanese from the get-go. Frankly, I don't know whether this is going to prove a successful strategy, but having chosen this particular introvert, we already picked a lot of lessons learned for things that are very unique here, and certainly we would have built it quite differently, but we picked a very different geography. The genesis of Habitto really starts from my co-founder, Liam, and myself, who worked together previously in a company called Singlife. Singlife is a full-stack digital insurance based in Singapore, which looked a little bit like LifeNet. Basically, it was distributing life insurance products through an e-commerce journey. And we picked that business at a point where we realized the growth was capped. The market for people that wake up in the morning, think about death, and go and buy life insurance is very small. And so the spark behind Habitto was really the same spark that existed behind Singlife and was this idea of building products that people really like. And we did for the insurance balance sheet, which is not an obvious thing to do if you want to build a product people love, because people don't generally like life insurance products. And we really focused on one customer insight, which was the fact that people really wanted to make their money work a little harder for them. People that just go to work, get a paycheck, and try to get to the end of the month and save a little bit. And just wanted that money to work a little harder for them. In particular in Singapore, they wanted that money not to be locked in. And so we came up with this idea of a saving product that had no lock-in. It was a very simple product. It provided the best yield in Singapore at the time, 2.5% with no lock-ins. That was it. And we put it behind a customer journey that was well-designed, a customer experience that helped people go through top to bottom of the conversion funnel in 6 hours or so end-to-end. We hit product market fit pretty quickly. We acquired 100,000 customers in less than 6 months. Singapore is a small market. The total target addressable market maybe is 2.5 million people. Then we realized that people had savings and that they started to think about how they get their savings working and harder. And so we moved some of their money into investment products. For investment products, we started to build protection for their wealth. And so that's how we got to the life insurance component, which is basically wealth protection. So all of a sudden, we have a connected experience that helps people save, protect, and invest structurally differently than what we're doing here, because in Singapore, we actually work through the balance sheet. But the idea hit the market with the word innovation, which in 2021 still sold. And we exited that business through a private equity transaction, which was signed for by TPG, which is a private equity company. So that was the end of Singlife and the birth of Habitto. Him and I and another guy that was with us as a chief product officer, well, Andre, really paused and reflected on this lessons learned about how the foundation of wealth for the majority of people is actually savings. And we looked for countries and customer behaviors that had a strong cultural bias for savings. We looked at many markets, but Japan stood head and shoulder above everybody else. Japan is the largest saving market by a mile, with $24 trillion sitting at the bottom of zero-yielding bank accounts. So that's how we ended up thinking differently about Japan. It wasn't on our radar at all. It started by this observation that Japanese really understand the value of savings. It's a social value and it's a cultural norm that is embedded here. Unlike Americans love to live beyond their means and be NPL forever, but here it's not the same thing. From there, it was just a journey of learning. How could it work? How could it not work? What would be different here? And we've been on this journey for 3 years now. Lots of lessons learned, but we're live. We actually have a real product, we have real customers, we have real licenses and real partners.
Especially with the Singapore comparison, Singapore had the world's best digital bank, DBS, for a few years running, and the whole infrastructure with SingPass is in place, and then you're coming to high-tech nation Japan, and maybe there's some things that are missing. So how do you approach this market? How do you bridge that difference in your approach and make it a Japanese proposal?
First of all, when we started this journey and we started to zero into Japan, it was the summer 2021. Japan was closed for foreigners. So we were talking about a country we couldn't visit. A lot of the early conversations with investors met with a lot of surprise and bewilderment. We'll fund you anywhere you go, but why Japan? It was actually investors that said, you've tried this country. It's really difficult to change people's minds about how they save. And we really were convinced that you start a business on the basis of what people already do. The majority of investors thought that we were crazy, particularly the Japanese investors. They saw 3 gaijin, one is a woman. I'm smiling now, but it was 99% no's, you're crazy. And it was the first round of financing, which we raised in 2021. We raised it purely on the back of the exit that we had in Singapore. The first task that we had wasn't even, can you build, can you get the market, can you get the customers, can you actually get into Japan? That was the extent to which global investors understood or appreciated what Japan was. It was not just far away, it was just completely off the radar. So the first task for us was just to prove that we could be here. We could exist as a business, we could incorporate. And then the next question was, can you get a license here? It was actually not at all, what's the product, what's the customer, what's the use case? There was none of that. And for a FinTech business, getting the regulatory side is essential, and it can be, if it's not done properly, it's life-threatening, it's essential. Our first task was to prove that we could actually get into Japan and we could speak to the regulator. The epiphany moment for us came when we realized that the regulator was about to issue a new piece of legislation called New Intermediary License, which when we started looking at Japan wasn't even there. And so we were struggling. We were struggling to think about how do we break through this market with a regulatory framework that felt prohibitively expensive for a startup. But the regulator handed over the baton to us, the opportunity to enter. I have to say that had this piece of legislation not been in place, we probably would not have attempted at all to enter Japan, because the complexity of breaking through the banking, securities, and insurance regulator is always very hard, but in Japan it's hardest, especially if you're a foreigner. So we were curious about this legislation. Nobody knew anything about it. Even within the regulators, it was like this chimera, this thing that was materializing at some point, was going to apply, but not very many people really knew about it. Not even Jetro, which actually has a good representation in Singapore. And so we had to dig deeper into the license. In fairness, even the regulator can quite openly say, look, it's brand new, we don't have many people that apply, we don't know exactly what it's going to be, but we had in mind people like you. We really opted for this regulatory framework to facilitate the distribution of financial products that operate horizontally. And so instead of being regulated front back from distribution through to middleware through the balance sheet of every single vertical, banking, securities, and insurance, for the first time, you could actually take a slither of just the front end of the distribution across the three verticals and somehow operate under a single regulatory regime. It was a big deal. We spoke to some of the players, it's not working, we already have it, who's going to use it, why are you going to use it? And the jury's still out, to be honest with you. The jury for this license is still out because it's got more interest from outside of Japan than from inside Japan. There are probably more organizations that are starting to apply for this license, but it's not by law.
Since you're an intermediary, key to your success is then to build partnerships. Whom are you intermediating to, and how did you go about finding these partners?
Yeah, we are an intermediary. We distribute third-party products. We make money by distributing this product. So the actual business model is invented in the dawn of time. There's nothing particularly innovative about our business model. It's the way it is constructed that is a little bit unique. The thinking behind what we're building is such the so-called wedge. It is acquiring customers on the basis of what they know, which is capital protected products, to take them to what they need, which is basically beginning to take the risk. And in the meantime, continue to do what they do normally, which is buy a lot of life insurance. So actually, the heart of the business is predicated on two very stable, recognized, practiced, deeply embedded customer behaviors, which is buying the protected product and savings and buying life insurance. Japan is the second largest life insurance market on the planet. There's more lives assured in this country than lives, which when say outside of Japan, literally people fall off their chairs. So the heart of what we're doing is that, and we think that building relationships through products that people really understand, through an experience that is convenient, it's transparent, it's modern, and it's facilitated by independent financial advisors, will also help us to guide customers to make better financial decisions when it comes to beginning to take some risk. That's the thesis, right? But we still have a lot of road to go through to prove whether our thesis is correct. I'm personally really curious by customer behavior, and we're looking at this business very much through this psychology of money, why people make certain financial choices, notwithstanding the fact that they actually look very irrational. It really struck me as we continue to learn about our customers and our potential customers that many of them actually have open securities accounts. 8% of them have some form of securities accounts open, but they don't use it. When you ask them about why don't they use it, the answer is actually quite telling. I don't know if you guys have an hypothesis as to why 60% of all online securities accounts are dormant. They say it's too much choice. I don't know what to pick. Again, this is interesting around how to build a product and an experience that facilitates customer choices when choice is a bad thing, and how much is too much.
How do you acquire customers? What's your primary channel?
We acquire customers through a saving product. We have a 30 basis points guaranteed returns up to $1,000,000 yen, and we deliberately price the product almost the opposite of how banks think about pricing anything. Like typically banks and asset managers, the business is predicated on AUMs, on some form of deposit, so the more the better, and the better the price. For us, it's the reverse, that we actually provide 30 basis points up to $1,000,000 yen, zero thereafter, because our goal is to acquire customers that have more than assets. We actually don't have to have a lot of assets on a per customer basis. We need to prove that we are meaningful in a customer wallet, but we don't have to have it all. And certainly we're not trying to become the primary bank. The point where our average customers deposit $3,000 to $4,000, that starts to be material for most people. For most people, having a place where you put $3,000 to $5,000 equivalent, anything between 5% and 8% of the saving overall over a period of time, it's a number that you start paying attention to. That's all that matters for now. It's like having customers depositing amount of money that is front of mind. We then leverage the app and customer experience and journeys and our own advisors to help customers make better financial choices. That's the entire premise. As a business, we're trying to end financial anxiety. We have noticed here in Japan, extreme, so extreme. I've worked in so many countries. This is the first one that, notwithstanding what people might think, very well-developed economy and very well-educated, fourth largest economy on the planet, the level of financial anxiety that exists here is unprecedented. Partly because people live a long life, etc., but partly because they have nothing to build a future and make sure that they've got the decent financial wellness to take them through 100 years. I'm not surprised that people feel anxious about it. The idea of having advisors is also something very unique. We didn't come to Japan with the idea of building an advisory force. Quite the opposite, right? If you're building a tech business, like, why do you need people? But it was in conversation with customers and us throwing out the water and all of the previous assumptions that we might have made about customer behavior. We realized that here relational decision making is very important, not just when it comes to money. How most people make buying and purchasing decisions here is a little different than in other places. It tends to be guided, less autonomous, more influenced. And because customers generally have a lower sense of confidence here than I've seen in other geographies. If you worked in other culture, in other geographies, Japan strikes you as a place where people generally have lower self-esteem, lower self-confidence than in other places, and that translates in how people think about decisions that they make, in particular decisions that are capable of making by themselves. The downstream consequence of this is that we had to reintroduce a form of trust that isn't just tech and is people-based. So this idea of reintroducing the empathy into the decision-making process was, again, another important customer insight that led us to the idea of having real people sitting behind the app that helps people making financial decisions.
Andre talked us through the market analysis and the color scheme, which is not the financial services color. Talk a bit about the demographic that you're targeting with that, because it is out of the box.
Once businesses become very famous and very big, there's all sorts of myth that happens in early days. So I think 5 years down the line, this will be probably one of it. How do we get to Habitto? How do we pick the colors? We were very clear that we were targeting what we call the sandwich generation. And sandwich generation is people in their 30s and 40s, so people that are well educated, college or university educated, they've got good jobs. They are either starting to have a family or already have a young family, or they don't have a family at all. There's actually big components of those that are single in their 40s. People are starting to enter what I call financial maturity. Money is no longer, I get a paycheck and spend it all on fashion this weekend. And so money has a longer time horizon and has a function and a role that typically extends yourself. People start to look after their parents, or they have children, or they feel like they have broader responsibilities. So that's what we define the sandwich generation. Is this segment in Japan that is about 26 million people. They actually have, on average, about $80,000 worth of savings. They already bought at least 2 life policies, typically a term policy and a medical policy. And they're now starting to move some of their assets very slowly into these accounts. And so there's obviously a new structural change that happens there. When we started to think about this group, we also had a particular keen eye for women. They represent obviously 50% of this group and generally underserved by financial institutions. They were often at the center of many financial topics, many financial decisions within either the family or the community in which they live. So it was really important for us to build a business that wasn't targeting women exclusively. We're not L-Best of Japan, but that was cognizant that women had a really big role to play in this sandwich generation. So we started to build the brand, and in fact, particularly my co-founder, Ian, he has a strong background in marketing. Prior to being at Habitto, he built Southeast Asia's largest digital agency and ad tech business, which he sold to WPP, which is like the Dentsu of Japan. So Counter actually is outside of financial services, and it's a very clear mind, clear eyes, thinking about financial products. Liam was really spearheading the brand building and the voice of the brand after a long search. We engaged with an agency here. We were specifically looking for agencies that built what we called authentic Japanese brands. So we worked with the brand that built Uniqlo, the clothes manufacturer. And we really liked Uniqlo as a brand because it's authentic, It's non-gimmicky, less your time is the sort of what about. And we didn't want to belittle, in a way, money. So we ended up working with this agency. They were done a ton of sort of customer research. The only guideline that Liam gave them was not green, not blue, not red. Pick any other color, not those. They came back with a different palette, and we ended up with this color palette, which looks a little bit like mustardy here, but the actual color is an earth tone. It tested really well with women, particularly. We really like that. Very soft brand. I looked at it, was like, this will never work. But it seemed like it resonated very well, the color. And we did some extra tests with accents and purple and green and pink. So we ended up settling for an earth tone with purple accents. The other interesting anecdote was that when we picked the different palette, we looked at the most commonly sold Shiseido foundation, and that is Habitto's color. It must be something that people recognize. What we really wanted to do was to build a brand that feels non-threatening and approachable. Together with the choice of the brand and the artistic direction came also the tone of voice. I don't speak Japanese, but we spent a lot of time working with our Japanese copywriter and our content writer to create a tone of voice that feels very human, very direct, very simple, very non-threatening.
So in 10 years, we have the Harvard Business School case study on the Shiseido. Good one. You talked about things that worked and that didn't work maybe as expected. Let's go into that a bit. You said you're targeting the sandwich generation. Has that materialized? Is that really the people you're onboarding now?
Yeah, I would say 70% of our customers are in that group, between 30s and 40s. This is not a brand for kids out of college, really. Less than 10% of people in their 20s. It's a brand that deliberately tries to speak to people that think about money as a serious problem, as a serious matter. People have problems to solve. When we started this journey, we thought that the hardest challenge for us was going to get the licenses. We are having to have more than one. While indeed it was not an easy journey, but it was not as hard as we thought we were. The regulator, in other words, has been extraordinarily welcoming and has facilitated our onboarding, has even given us a timetable, which I worked with other regulators. I worked with the FSA and I worked with the MAS, and they don't give you a timetable. You give them a timetable and you hope for the best. We're very pleased. And the framework that they promised worked as it said on the tin. So far, we had no weird, strange surprises, notwithstanding the fact that we are live and they've done in 2 on-Friday sessions at Cannes. And so that was one surprise. And certainly, if there's anyone that would look to natively enter into Japan, I would say keep an open mind for working with the regulator. The partners, yes, for the partners, we work currently with one partner per vertical. On the banking side with GMOs or NetBank, on the investment side with sales and asset management, and on the insurance side with LifeMed. 3 partners, they're different. More probably is the one that we had the longest experience with fully integrated end-to-end API. There's basically no manual intervention into any of our workflows. They've been incredibly supportive and better and faster than what we expected. Their backend systems, they're well architected, they're responsive. They needed to build more API than what we needed because when we first selected them, and we looked at others as well. And so their API library was somewhat public, not all of it, but somewhat public. And they put everything on the table. It's like, yeah, but we need more. We worked from that point onward, and we helped them to build even a more robust set of API calls and strengthened their BaaS offering to the point that they're probably one of the best, if not the best, in Japan at the moment. So the relationship is going really well, and in particular, it was very useful for us to hire Yasunori-san, our COO and representative director, essentially our human middleware when it comes to the cultural interpretation here. And we wouldn't be here without him. He's been at really fronting a lot of the regulatory relationship as well as the partner relationships. Say with LifeMed, we are in the process of opening the Pandora's box. What to have, what's available. This will take us a little bit of time. In other words, the readiness level of the partners is very different. And we think we already picked partners that have some degree of digital competencies, right? Because if you think about, say, an asset management, they distribute their product directly through their website. LifeNet is de facto the only digital life insurance in Japan. So we already pre-selected partners that at least knew how to spell digital, and Science knew a little bit more than that. But it's still proving quite challenging at times. And they're not even think about what it would look like when we will expand beyond these three, certainly on the investments and on the insurance side.
If you take a positive look where we are in the economic cycle, then we will get into this wage price spiral upwards, and the sandwich generation and even the younger people will disproportionately profit from that, simply because also the competition for labor is so hard. We get these raises 6 to 8% that are being talked about. All of that in an economy like this will take some time to materialize, and hence the question, is this time really different? Will we get into these multiple cycles of higher wages, higher prices, etc.? How do you read this now, having been remotely and then on the ground now for 2.5 years or so?
The answer is that I don't try to read it too much. There are certainly signs that Japan has become a more attractive place for capital, certainly since we started. There's certainly lots of assets that are up for grab, especially if you have private equity mindset and capital structures. The question is whether these are harbingers of something permanent and structurally. That, I think it's really hard. I certainly don't know. What I do know, though, is that differently from when we started 2 years ago, where, as I was saying, investors were like, where are you going? Japan, where? I think there's more openness. I definitely see more investors looking at Japan with greater interest for three main reasons. One, structurally, a lot of capital that used to go into China, when people think about the allocations, Europe, big macro regions, they would say Asia, ex-China, ex-Japan. That was the norm, right? And so now I think they're saying ex-China, but Japan is in. And this is new. Right. Particularly as the rest of Southeast Asia is a little bit frothy, particularly Indonesia, where a lot of capital is gone over the last 2 to 3 years. Investors are starting to look at more interestingly at a stable geography like Japan, with different economic macro, with different demographics. So there's many reasons as to why investors are starting to look at Japan. Certainly my ambition as we continue to build this business is to continue to attract onto our cap table a combination of both domestic and global investors that help us to really shape the business with not just the quantum of capital that we need, but also with the foresight and with insight that capital brings from different geographies. In the same way as we're trying to build a business that is diverse and employs people that have a variety of cognitive skills, not just necessarily nationality or gender differences, it's equally important to have a capital structure that has that difference. We raised capital twice before with that particular ambition, and we managed to bring investors to Japan for the first time. So I'll repeat this time too.
You act as an advocate for Japan in your venture capital community, right? Are people getting off the fence and actually into this market, or still like let's have an interesting conversation?
Don't know is the answer. I'll see in a couple of months. Reality is that there's more interest, but there's certainly many barriers to enter Japan. I need to tell you, because Japan is not particularly open environment when it comes to being an entrepreneur, or even as a foreign investor to be able to do business effectively here, let alone the barriers language, which it's enormous. If even just that was going to be tackled, Japan would see orders of magnitude of changes in interest from entrepreneurs and investors globally. But that is not an easy one to fix. Investors would typically look at the exit routes of startups in Japan, which is being unique because there's one and only route, which is how to basically live on the mother. And that's the long and the short of it. And that's not what happens elsewhere at all. The majority of businesses outside of Japan don't exit through an AIM listing, like a small caps listing. They get bought by other businesses that basically trade sale. And that's also a sign of maturity, particularly in a FinTech context. But that's true in majority of the verticals. That is a real proof point that I think the ecosystem at large is still it's evolving, right? It's maturing. But in the same way as you don't have second, third generation of entrepreneurs, you don't also have a market that has multiple exit options. Very often I'm asked here by local investors, so what's your plan for listing? And I'm like, I've got none. That's not my plan. What you do? That's called trade sale. That's how you get multiples that go beyond the market.
And the next big thing is going global. Are they asking you about when you're expanding into Singapore?
They do that, but that's generally a reaction of a lot of investors here that are trying to get a lot of their SaaS businesses going globally. I think it's very hard if you have a direct consumer business in Japan to go global. It's possible, but you need to basically conquer Japan first. Once we've done that, we'll be in a very different shape anyway. For now, I don't actually have any plans to go beyond Japan. The one big challenge that we've got ahead of us, I'm not scared about it. I certainly know how to do it. I've done it before. It's just that the business that we're building, should it succeed in the form that is currently at, it has a lot of space for growth here. So yes, I do get that question, and I gave a response that people don't necessarily like, but there is a rationale for it.
What did it take to build a team in Japan?
This was one that we probably underestimated. I think our challenge is that on one hand, we're like really focused on this license and the regulator, and actually was probably easier than what we expected. The one bit that we thought was going to be easier was in hiring good people. I particularly struggle with that because I wasn't used to hire people in Japan and where you find them and how you motivate. And I'm actually not sure I've solved it at all. I'm still trying to figure out where to get good people. Good people, not just technically. Actually, you find some good technical people, but the mindset of how you work in an organization that has a higher chance of failing, that it has to succeed, even just that mindset is really difficult. It's not very common. It's not very common anywhere, but here it's particularly uncommon. Hiring people and building a culture where you test continuously, that many of these tests will say that you try and get your hat problems probably every day. The idea of not walking the straight path, which is so critical when you build a business from scratch. These are real cultural biases that Japan has opposites of. That has been a big challenge. It's surprising. I just didn't know. I came with some expectations. I had a clear idea of who I needed to hire, and I was like, where are you? And I think there's a lot to say when you're back to your point about changes. Future is here, it's just unequally distributed. Somebody said. So change will probably happen, but it will take a very long time because it will impact education, it will impact social norms, what's socially acceptable. This is one of the biggest challenges that I think Japan has in terms of the reality, the idea of where the macro could be going versus what actually lands at ground zero. There's still a very big gap there.
Just to add to that a bit, there are the numbers of foreigners that are increasing in Japan, and I have probably a bit of a cynical view on that simply because Japan needs some pressure to change. And if you have a scarcity of labor that will just force you to digitize, it's like the black ships that are coming in, and just importing labor takes that pressure off again. So I wish we're not having 3.2 million foreigners in Japan, rather a bit fewer, but then have more actual change that happens and not just continue what we've always done.
This is where I have a view in terms of what good looks like, but how to get from where Japan is at to where it should be, I genuinely don't know. I had this intuition that the way this country culturally absorbs and reflects change is a little different than in other cultures. Just as an anecdote, I'm originally Italian. Italians couldn't be more different than Japanese, and I'm always so surprised at things here, and I look around, wait, what? The way Italians change and the way you affect social change is by hacking it. For Italians, hacking anything is a social value. When I was a child, I was raised by my grandmother. She used to say, fatta la legge trovato l'inganno. She used it all the time. And basically that means you make the law and I break it. I actually would say, I'll find a way to hack it. That's how the social norm works. But here's very different. That I don't know the answer to your question, how you get from here to there, but I suspect it has to have some very local flavor to it. It would appear to me that some form of top-down approach seems to be working here much better than, say, would work in my home country, where, God forbid, if you tell an Italian, I'm telling you what to do. That's the one reason why I'm not going to do it.
It looks like Mark Zuckerberg went to school with your grandma's friend.
In practice, how long did it take from the first touch point to getting the license approved?
So first of all, the license is an umbrella license. You apply, and then you apply for a particular vertical. The first application requires fulfilling regulatory requirements at umbrella level as well as vertical level. Therefore, the first time took about 9 months all in. The second time only took between 4 and 5 because we were just basically graduating from the second vertical. But all in, it's actually a very reasonable, functional license if what you're trying to do is distribute simple financial products, which is really at the heart of what we're doing. The license was so new that we were finding ourselves asking questions and then we're coming back the same question. Hey, there we're going around in a circle. And maybe nowadays the license is a little bit better known, even within the regulator, and so maybe you don't need a civil law firm behind you. There was a period of presenting the business and a period of assessment of the business major workflows. Then there was essentially an approval in principle, and there was more due diligence that they ended up doing, just crossing the T's and dotting the I's. Just wanted to add one anecdote which surprised me was that when we first applied for the license, we were the first from outside Japan, so the regulator was very excited, right? And so I think that was it. We were like the so-called three-headed dog, and oh my God, they're coming from abroad to this license. We applied, and then it's only halfway through the first application that we said, yeah, but by the way, we're a Fed company, so we're doing this digitally. And they were like, what do you mean? All this work was that at that point, they told us, oh no, if you want to do it digitally, then we need to add another license on it, special license. That one was unexpected. So this is one aspect of this license that I think the regulator, frankly, needs to just rethink a little bit, because you have the intermediary license across the banking, securities, and insurance. And even within each vertical, there are some restrictions that I think should be listed. But the most critical one is that, of course, the license shouldn't be different, or certainly you shouldn't apply for a fourth license just because you want to do things digitally.
I have a question on how you choose your partner. So for the investment and the insurance, probably you have less choices among all the companies in Japan. But for the banking side, what did you go with EMO?
Yeah, banking choice was probably the most structured. We went through a process, and when we picked a partner, sometimes in 2022, we had a few criteria. We needed a partner that was operating as banking as a service provider. So it had a business called banking as a service. We also did some technical due diligence on what does that business look like, and so the extent and the robustness and the quality of the API infrastructure that they had. And we looked at price points. And so which ones are actually capable of working with startups? In other words, have their infrastructure and they've set up their business in such a way that can effectively work at reasonable price points for startups. These were the three most important criteria. The fourth one, which came after, was also which ones of these partners can we, small startup, stand the chance of actually having a personal relationship with the executive team, so that we're not just a name and a logo on a website, but there is actually personal relationship with decision makers. That's where GMO came is winner amongst the four that we picked. The world of banking as a service has evolved since, and there's certainly others in markets that were probably behind GMO, and maybe they are now on par. If we were to pick again, we would redo the process. I can't tell you what the outcome will be, but I think there will be more choices today than there were 3 years ago.
I was going to ask about the change in investment attitude, particularly now and even this year with the REITA being introduced into Japan. Are you seeing a difference now potentially to what it was a couple of years ago in terms of people's appetite for risks and the type of products they're being interested in investing into?
There's both quantitative and qualitative feedback that we're seeing from customers that are starting to even just use the language of visa investments and risk differently. You can see in macro numbers when you look at money that flows into retail investments into NISA, the growth of NISA accounts across several big platforms. The qualitative insights that we're seeing is that whilst customers open accounts, then there's still a lot of confusion as to what to do with it. That goes back to the point I made earlier. The very fact that you have a product on the shelf doesn't necessarily mean that people want it or like it. That's one of the, certainly as a foreigner coming into Japan, was one of the biggest observations that I had, which a lot of these very big brands seem to delight themselves into putting all of their wares on available. And they seem to be fighting matches to who's got more. It feels to me that actually the customers want less. Sometimes building businesses really is based on such basic insight. Our philosophy is that the platform is a curator of the product, and we're trying to reverse the burden of choice from the customer to the platform. That's our ultimate goal and our ultimate job to do. In order to do that, then the platform will need to select partners and products and be very disciplined about what makes the cut. Because there's obviously an incentive putting more, and sometimes the cost and the effort of putting more is less than putting less. Our biggest challenge is actually what is the minimum level of products that we can put on the platform to make the platform really intuitive.
A round of applause for Sam, please. Thank you very much.